Welcome to Housing Development.
I'm Jim Tobin.
And I'm Paul Lopez.
Hey, Paul.
Back again.
It's good to be back in the office, I think.
Yeah, we might be the only ones, right? It's kind of slowing down here.
Yeah, it's the weird time of
August.
Of August, yeah, August recess, right? And so everybody's on vacation, and whether family vacations, summer vacations, anything. It's weird. There's no one on the streets. The commute's nice and easy. It's almost COVID-esque in its.
Wow,
in its,
you went there.
quietness.
That's kind of.
It's rough. Well, before we get going, should we thank our great sponsor, LG Pro Builder?
Let's build a good life together.
Thanks, LG, for being with us, as always.
Absolutely. So we have a special guest today.
We do indeed.
Let's talk a little bit before we invite him in. So we talked about the August recess. Things have kind of shifted mentality. Congress did what they had to do before they left, right? They passed the bill that everybody wanted, or the president wanted.
Beautiful bill.
The big, beautiful bill.
Yeah.
Right. In the next few weeks, what are we looking at in terms of when they come back? What's going to be their top priorities?
Well, next 2 weeks, the president's going to own the narrative. Not that the president doesn't always own the narrative, but
he
they're
did the
right.
Beatles thing the other day, where he's up on top of the rooftop of the White House talking to the reporters.
Yeah, he's crazy, and I mean that in the best, just like
in the best of ways.
Yeah, right. Yeah, right. But so we just saw an announcement today, more tariffs. So tariffs will dominate the next couple of weeks, as will his continued crusade against Chairman, the Fed chairman,
who didn't do what he wanted to do.
The
Fed kept the rates the way they.
Yeah, that's right.
It's flat.
So not surprised, I guess. But anyway, but Congress has a crazy September ahead of them. They got to pass a funding package where it looks like the Democrats are going to play hardball. So we'll see what happens as we get closer to September 30th. They've got the appropriations bills just to kind of crank through, at least to set the stage a little bit. They've got a pretty package in it, plus a bunch of judges and political appointees that
they have to
the
pass
Democrats are playing hardball on. So it's things are stacking up. But just chatting with a colleague yesterday, this is nothing new. Everybody's like, oh my God, how are we going to pass the appropriations bills? We've been doing this for the better part of 2 or 3 decades, right? I mean, we'll get there. We always do. Do the Democrats really want to shut the government down? I don't
what that
think
looks
so.
like.
Yeah, right. So,
all right. So you already heard a little bit of his voice.
Yeah, that's right.
Agreeing with you. Let's bring Ryan Donovan in. Welcome, CEO of the Council of Federal Home Loan Banks. Right.
Yeah.
Welcome.
Welcome to Housing Development.
Thanks for having me.
Yeah.
Well, first of all, let's talk about what is the Council of the Federal Home Loan Banks.
Well, much like the National Association of Home Builders, the Council of Federal Home Loan Banks is the trade association for the 11 federal home loan banks.
Nice.
For those that may not be familiar with what the home loan bank system is, it's a system of 11 financial cooperatives that are essentially wholesale lenders to banks, credit unions, insurance companies, and CDFIs. Mm. Collectively, they serve about 6,500 financial institutions, and our job is to provide them the liquidity that they need to meet the lending needs of their customers and their members in the case of credit unions. We were established by Congress about 90 years ago, so we're a government-sponsored enterprise, but don't let that distract you. What we do on a day-to-day basis is we're a provider of liquidity for our members, to our members. We do that by taking collateral that Congress has determined that we can take, and it's mostly mortgage-related collateral, and that's the connection that we have to housing and to housing finance.
Right. So, did you want to say something?
Yeah, no. So we've had a long partnership with the home loan banks. Many of our members have been directors on the banks across the many, many years. So thank you for that, right? It's just we recognize, it is kind of they are the third GSEs, right? Everything's all Fannie and Freddie, but the home loan bank is such an important part, like you said, of liquidity in the mortgage system, in the banking system. But two entities that you do provide liquidity for that our listeners may not be familiar with. CDFIs, explain what those are, and then insurance companies. Explain that nexus for me.
Sure. So the CDFI is Community Development Financial Institution. There can be depository CDFIs. You can have a credit union or a bank that's a CDFI, but you can also have a non-depository community development financial institution. And what their role is in their community is to make sure that the funding and development needs are met in their local community. They're looking for ways to fund affordable housing projects, to make sure that their community has momentum to go forward. Where they invest in those projects, where they have those projects, they can pledge those assets to the Home Loan Bank for additional liquidity, and we keep that money going through.
So, like a state housing finance agency.
Well,
Give
it's
me
a
an
little
example
it's
of
a
one, if
little
we
bit
could.
different than a state housing finance
Okay.
agency, but you will find different CDFIs. In Morgantown, West Virginia, there will be a CDFI that will be dedicated to making sure that there is expansion of affordable housing in that
I
area.
gotcha. Okay. And give me the nexus on insurance companies too.
Yeah, well, insurance companies are some of the most the biggest investors in mortgage-backed securities, right?
Right.
So they're taking they're investing their funds into mortgage-backed securities that they can invest
Right.
or that they can pledge to the Home Loan Bank and have the collateral that they need to manage their balance sheets, fill claims, et
Right.
cetera. But what we do for them is take that illiquid asset and make it liquid.
Okay. Interesting. Yeah. Thanks for explaining that. Appreciate it.
So you just came out with a report not too long ago, right? In terms of the impact of what the federal home loan banks are doing,
That's right.
right, into the economy. Reading it was fascinating because you had so many different programs in a very diverse, fields that I never would have connected. Like, how do you, first of all, how do you decide what you invest in, and then what's driving that mission? Who kind of leads that?
Sort of the breadth and the depth of those programs it's a feature, not a flaw of the system, right? So the 11 banks are regionally located. They each have a area that they serve, multi-state area that they're responsible for. And what that allows is for them to tailor those programs to meet the specific needs of their districts. They're called districts. And so that's why you have so many of them, and many of them have similar features, right? So, we've got a number of banks that are focused on workforce housing, and their programs might operate a little bit differently based on the needs of the states that they're operating in. But that report this is the third year that we have produced an impact report, and it's really designed to tell our story of how we impact the communities that the banks are in, and also how we impact affordable housing more generally. That story really went untold for a long time.
Yeah.
Since 1990, we've had a statutory obligation to support affordable housing through program. Government programs have these fancy names. This one's called the Affordable Housing Program. But the story of the impact has really gone untold, and it shouldn't. I mean, we are, as a system, the largest single source of private capital support for affordable housing in the United States.
Really?
And you wouldn't know that, right?
Yeah, even I didn't know that.
$1.2 billion last year alone went to affordable housing. Was committed to affordable housing from the Home Loan Bank system, and it gets into communities in every corner of the country.
Right.
I think it's a great problem. I mean, you and I have talked over the years. I think the Home Loan Bank system hasn't done enough to toot their own horn, right? They like to fly under the radar. And I think it deserves to be shouted from the mountaintops.
Yeah, no, I think that, certainly over the last few years, we've been under a lot of pressure.
I was going to ask, that's my next question, is about, there has been a lot of pressure over the last couple of years, but.
Yeah, I mean, I think part of the reason that there was pressure was because we weren't telling our story.
Right.
I'm relatively new to the Home Loan Bank system. I'm approaching my third year anniversary with the council. And when I came on board, one of the things that they wanted me to do was to get out there and tell a story. And boy, did I have an opportunity to do that, because within about a week of me starting, the Federal Housing Finance Agency, our regulator, initiated a comprehensive review of the system. And that was a tremendous opportunity for the home loan banks.
Sure.
We looked at it as an opportunity because what it allowed us to do was listen to our stakeholders, our members, housing groups, the home builders, others, to find out, what were they think, what do they think about the system? Where do they think we could improve? What are we doing well? And the takeaway from that listening part of the process was everybody wants more from us.
Mhm.
And so the report is actually a reflection of how we are doing more to support affordable housing. And we have made an increased commitment. So under the statute, we're required to do 10% of our net earnings. Over the last couple of years, the banks have pledged to do 50% more. So we're doing at least 15% in every district across the country. I think our total contribution last year equaled about 19%. It's almost double what we're required to do.
Yeah.
That was in response to what we heard in that process that stakeholders want more. But we're going to remain steadfast, I think, to that commitment and continue to listen and find ways that we can be impactful.
Obviously, we're always talking about housing affordability here. The entire industry is. But one thing that I found in the impact study was first-time home buyers, which is critically important.
Right.
We're always pushing it. Once you get in, it's fantastic. It's your stepping stones to wealth. I mean, but you guys seem to have pivoted more heavily on that first and really focusing on that first-time home buyer.
There's a supply issue that I think we're all very familiar with. There have been demand levers that needed to be pulled too in order to try to achieve greater housing affordability. And one place where the home loan banks have leaned into is down payment and closing cost assistance. That's one part of the affordable housing program, and it's also where many of our voluntary or discretionary efforts go to. But there's, we're doing work on both sides of that equation. But yes, we have leaned into that because, that's the down payment is often a very big hurdle to borrowers, particularly first-time home buyers, to closing the deal.
Right.
And we've tried to be helpful in that area.
Yeah, absolutely.
Yeah. So talk a little pivot to the economy for a minute. What are your members seeing out there, right? Obviously, liquidity is really important in this moment of time where we're, with interest rates, hovering in 6.5 to, between 6.5 and 7%.
Yeah.
What's your thought about kind of where we're headed? What are your members seeing?
Well, I mean, there's a lot of uncertainty, right? I mean, if there is a word for at least the first 8 months of this year, it's uncertainty. And
our chief economist would agree with you, by the way.
Okay,
that's right. Yeah.
I'm not an economist, but I can fake it a little bit, right? But what we try to provide is stability through uncertainty, right? And if you look at how the home loan banks have performed throughout their history, what you see is we're a foundational support for community banks, for credit unions, for small lenders in communities across the country, and that's playing out right now. I was just looking sort of at the advanced trajectory, and it's been pretty level. Certainly it's come down from the peak in 2023, but and that's to be expected. I think that in this time we're not seeing a lot of peaks and valleys, and that's probably a reflection of the uncertainty in the economy.
In your world, what are the headwinds that you guys are facing in this environment?
Well, I think we're just like everyone else. It's sort of the policy uncertainty, right?
Yeah.
We've had a change in administration. In many respects, that's been a very positive change for us. We've gone from being highly scrutinized and not that scrutiny is a bad thing, but really from the previous administration wanted to fundamentally change us to achieve their political agenda.
Mm-hmm.
And now we're in a situation where if we're boring, this is going to be okay but being boring allows us to continue to be there for our members every day, providing them the liquidity. That's what they want. They want the certainty of knowing that they can take collateral to the home loan bank,
Yeah.
and they're going to get liquidity quickly and affordably, and they can do that every day.
Right.
And the other thing that struck me in the report was you don't do this alone, right? You do a lot of partnerships, right, with local groups, state. I mean, kind of all the way up the line.
Absolutely. I mean, we're 11 banks. We're serving 6,500 members.
Yeah.
We're trying to spread the butter across the whole piece of bread, the whole loaf of bread, right? And we also recognize, I think everybody recognizes that there isn't a single solution to the housing affordability crisis that we face. And for these projects, oftentimes there aren't single funders. It's groups coming together to put together the funding package. A lot of times we're that last piece, or the gap funding that might take a project to completion. Right. So we recognize that that's our role, and we try to do that as many places as we can.
Yeah. And you do get involved in the construction side as well, right? You're right. You are part of the production pipeline of capital.
Absolutely. I mean, I think that when we're participating in projects, particularly through the affordable housing program, where we are that one of the pieces of the stack,
right?
Mm-hmm.
That can be very impactful to the development of it. The flip side of the coin is I think we are also impactful on the advance side, right? So the banks that home builders use to get their funding for their projects are more likely than not members of the home loan bank system.
Right.
They're pledging collateral to get liquidity to fund those loans. So I think it's on both sides of the equation.
So looking ahead, what are your priorities coming in the next 1, 2, 3 years?
Yeah. So, we have, a new director at FHFA, Bill Pulte, big name in home building, well known to you. And he has, I think, very quickly and decisively taken a lot of action. He's focused primarily on Fannie Mae and Freddie Mac. As I've heard him say many times, he understands those enterprises are under conservatorship, and we are under his supervision. Mm-hmm. But he has been very helpful to the system early on to make sure that the regulatory expectations and the supervisory expectations are focused on safety and soundness, so that we can continue to be there, and we don't have to worry about some of these other things that were layered on part of a political agenda. That's been very positive. There are some things we've talked to him about that could be helpful going forward. The AHP program. I when I hear the president say, "Hey, for every 10 regulations, or for every new regulation, we have to eliminate 10 regulations," I think about the affordable housing program that's subject to, I think, about 13 regulations. Wow. It's in desperate need of revision and consolidation, so that the funds that we put through that program can be more impactful. So we're hopeful that some work can be done around that. Another place is there was a advisory bulletin that was issued by the previous administration on how banks assess the credit worthiness of their members. It really has put the banks in a position to be another regulator of their members. We think there's opportunity for that to either be rescinded or to be revised. And, that's something we'll continue to talk with the agency about. But I think when we think about the change in the administration, it has generally been positive for the work that we're doing to try to serve community banks, credit unions, insurance companies, and CDFIs every day.
Yeah, you're having visited and chatted with Bill Pulte. There is this kind of sea change of getting back to not only the mission of Fannie, Freddie, and the home loan bank system, but like you said, safety and soundness, getting away from some of this noise. Energy efficiency was one of the things that was driving us crazy over the last 4 years. Or like you said, kind of this political agenda that was being forced through the banks and the system and the companies. And to see that pulled back, I think is a good thing. Focus on their mission. As he said to me, look, we want you to build more homes, and we want to make sure that we're behind that with the financing to help people move into homes.
Yeah,
We'll go.
and I think with us, the message at least that we've received is continue to serve your members.
Yep.
Provide the liquidity. Make sure that the lending continuum, the mortgage finance continuum, continues to move, and that's what we're doing. And I think the impact report reflects some of the work that we're doing on the ground on housing affordability. And day to day, what we're doing through our members in terms of providing advances shows the critical role that we're playing, and we're doing it in a safe and sound manner. And we appreciate the leadership that we're getting from FHFA.
Yeah.
Excellent.
Yeah, we would. I want to put in a plug. We've talked about this, and you've been a great supporter of this. And one of the challenges we've had over the last decade is not a lot of builders are actually on home loan bank boards, and I know you're a supporter of that, especially as supply becomes one of the answers to the crisis. Working to try to get more directors on there, and but that's something.
I mean, listen. You've heard me say it a couple of times.
Yeah.
I think we value the expertise that home builders bring to the boards. That's historically been the case. Yeah. There was a change a few years ago where the agency said that home builders couldn't be public interest directors, but they're still eligible to be independent directors. And there's processes, but it's clear that, if you're a home builder, you're connected to your community. And that's the type of feedback and insight that's, I think, instrumental to any organization trying to operate.
100%. Yeah.
I appreciate you saying that.
Yeah.
Thanks, Ryan.
Yeah. Ryan Donovan, thank you so much for being here.
Yeah. Thanks for having me.
Yeah.
Thanks for this partnership. It's great to work with the home builders, and I look forward to continuing that.
Absolutely.
You got it. Thanks.
Yeah, thank you. That's it.
Yeah, that was great. No, thanks, Ryan, for being here. It's
Absolutely. All right. So till next time.
great.
When
Yeah,
did I
well,
shout out?
before we go,
Oh.
I got to give
yes.
a shout out
My apologies,
to the passing of a frequent contributor here to the Housing Developments podcast. That's Hulk Hogan and WWF legend. I will say that because I grew up there, and
Let's make sure
it was even just a year ago where he was centerpiece of the political campaign or the convention, and we saw that. So I just want to throw a little shout out to the Hulk and his family, and part of my childhood that I feel a little bit sad about the Hulk.
I think all three of us, right? That's what I mean.
That's right.
You can wake up on a Saturday or go to bed on a Saturday night.
Yeah. When did the kids start saying "Okay, Gen Xer"? Right. Yeah. So,
we're there.
So anyway, little shout out to the Hulk.
And then a shout out to LG Pro Builder.
That's right. Let's build a good life together, brother. So we'll work that in. So anyway, all right. Well, until next time.
Absolutely.
I'm Jim Tobin.
And I'm Paul Lopez.
See you.
Bye.